You're listening to The Practical Wealth Show with Curtis May.
All right, guys, welcome to another episode of The Practical Wealth Show. So this show is for business owners. So everybody listen, but if you're a business owner, I really want you to perk up. I have a great friend of mine, Mr. Sam Denton from Reclaim Tax Incentives on today. And we're going to talk about some little known tax tips, tax strategies, niches that literally can save you tens of thousands of dollars. And so let me tell you about Sam. So I've known Sam for about 3 years now, and we're both part of the prosperity economics community. And he turned me on to this. And so we're kind of, I would say, joint venturing on this strategy because, we talk about, let me just reiterate our philosophy. Most people think the key to growing their wealth is investing, is to find better investments that pay a higher rate of return. But I start with the opposite tack. If you've got a bucket and it's got holes in the bottom, is it better to turn up the volume of the water, or is it better to plug the holes? And so this is a hole plugging show, right? Because the top 5 leaks in your money bucket, how you pay your mortgage, taxes, how you fund your retirement plans, how you pay for kids' education, and how you pay for major capital purchase. So today, the bucket we're going to talk about is the tax bucket, all right? Because that's really your number one wealth transfer, right? And so you can keep more of what you make. You're halfway to the winner's circle, all right? So Sam, I'm going to give him a little bit of your background. First of all, welcome to the Practical Wealth Show. Tell them what I didn't tell them. Give them a little bit of your background, and let's save these people some money.
Yeah, no, thanks for having me on, man. It's so exciting to talk about tax mitigation as opposed to COVID-19 the last couple months. So
for sure.
Excited to be on, man. Yeah, so no, my background, I've been in the financial services world for 12 years. I started when 2008 and 09 were happening. And, with the bank debacle, the real estate crisis and the stock market crash, and I was working for a traditional financial services firm. Didn't hit me immediately, but I started to question financial wisdom probably a year or two after that. I read a book called Rich Dad, Poor Dad, which I'm obviously probably you and a number of your listeners are familiar with. And then got out of the traditional services space, started my own alternative financial services firm, and recently started a tax incentive consulting firm where we work with business owners to help them locate and recover niche incentives and credits that traditional tax planning just doesn't focus on. They're more general practitioners, and we're more kind of niche consultants to help them recover cash flow. So that's about a 60 to 90 second blurb of last.
So are you replacing their accountants, or this is just or just, hey, here is something they don't study that they miss, and you can either still work with whoever you're working for. We're just going to help you on this little piece.
Yeah, sure. No, we actually want CPAs as referral sources. I would say 95 to 99% of CPAs just don't focus on this. And so we want them to refer their business owner clients to us so we can add value to them. So no, we want them to definitely keep their CPA. We're not looking to replace their relationship at all. They need their CPA for their income tax returns, bookkeeping, payroll, the great services that they provide. So no, we want to really use them as referral sources. And our goal is to educate their CPAs and equip them so they can have knowledge of these kind of niche incentives and credits to therefore obviously recover more cash flow for their clients.
All right, perfect. So tell them what it is. What do you do? What are we doing, and how do we help them save money?
Yeah, so we're an incentive and recovery consulting firm. And so what that means is, kind of like if you were to go to a bank to get a loan, there's an underwriting process to see what you would qualify for, what interest rate you would get, what have you. We're obviously not a bank, but we have a questionnaire process to where we uncover what they would qualify for. And we do that by looking at their business activities. Mm-hmm. So it's about a 4 to 5 page questionnaire document. It takes about 45 minutes to an hour of their time. And we're ultimately trying to qualify them based on what they're doing. So we work with anywhere from 50 to 60 different industries. Down the road, we'll work with, maybe more of a niche industry selection. But after we uncover based on what their business activities are doing for credits and incentives. Then we give them an estimate and proposal what we can find. So the main credits that we're focusing on are the research and development tax credit and hiring and training incentives, and we're getting into energy efficiency as well. I would say probably the most widely misunderstood credit is the R&D tax credit.
Mm-hmm.
Most people think that you have to be wearing a white coat in a lab, stirring chemicals in a beaker, and that's just not the case. And most small to medium-sized businesses don't have the financial resources to employ financial analysts or certain CPAs or tax analysts on staff to scrub the tax code or look for these niche credits. And all the big boys are gobbling these up right now, and they are taking advantage of these credits to help them pay less tax. So the research and development tax credit, if you're essentially improving or developing or designing a new product or a process or a technique or a formula or software, you qualify for it. There's a 4-part test for it. Or if you're taking risk with your business, now most businesses are doing that.
That's right.
If you're doing, now here's the tough thing that really is really open to misinterpretation. You have to do things that are technological in nature. But what the IRS actually means is that your work has to be backed by the hard sciences. And therefore, that means it has to be built in principles of engineering or construction or building or chemistry or biology, based on that. And there's a huge web on what companies can qualify for. And you have to show that there's a process of you testing, modeling, refining, evaluating alternatives. So there's a process that you have to qualify for. That is the main credit that we're focusing on. And usually what we've seen, if they're paying employees or have contractors or have supplies that they're purchasing for that, we can take anywhere from 5 to 10% of that expense and get them back as an actual cash credit in their pocket.
Wow. If you're in business, you should be I was reading something from Dan Kennedy. It says all wealth is a product of systems, right? And so I'm constantly doing research and development on processes, on testing this, on engineering strategies, and most business owners they just don't think about it. It's just something they do, but most people already have a process. They just haven't codified it.
Yes.
And they're always doing research development. They're always doing this. And so what happens is sometimes you've got to take apart your business and look at what you're doing. I guess that's what it sounds to me. That's what your specialists are doing is, all right, here, let's see what you do. And all right, you do this, and here's what you qualify for. Now, I want to get your attention. So I won't go back in more details, but so when they get that money back, what are some of the types of monies you've gotten back for people? I want people to understand that you need to keep listening hard. All right.
Oh, yeah, sure. And right now, literally, we are taking the risk up front with the questionnaire. And, we may find, maybe a little bit of money for clients, or may find obviously a good bit over 6 figures. So we're working with clients that are dentists, that are chiropractors, in the manufacturing business or healthcare or engineering, general contractors, construction. So there's a lot of industries that qualify for them. And I would say the range of money that we have found, literally probably the smallest is a little bit just south of $10,000, and the largest is just south of $200,000.
$200,000 they got a check back from the government.
Yes. Yep.
Or $10,000, not the SBA Corona loan or whatever,
Yeah, no, this is money that they would get back that they should have gotten back, because the IRS allows us to go back up to 3 years. We can't go back further than that.
Mm-hmm.
So whatever years that they have filed their previous 3 years, so if they haven't done 2019, they've done 18, 17, 16, we could go back and evaluate those years, look at their business activities, and see what they would qualify for that. We're not messing up their personal tax returns. We're not messing with their deductions. That's what their CPAs are doing. We're just going back and adding these potential credits on there to get them more cash flow, or just more cash, or more cash. Refunds per se. Mm-hmm. And the cash they get back, there is no tax paid on that, because that is a refund. More than likely with all these, the IRS owes them actual interest.
Right.
So they'll get their refund plus interest, and then the IRS will tax them on the interest. So,
right. Give me my money back, right? And it was that H&R Block market. Give me my money back, America. Usually like people talk about it within a tax refund. So tax refunds, hear me guys, are stupid. All right. In a sense, because refund means your money again. So if you're getting a tax refund, and let's say you're listening to this, your W-2, that's another talk. Ask you about that. That just means your W-4 is filled out wrong and you're overpaying your taxes. We're talking about a refund where you've done everything right, but there's just credits you don't know that are available, and you can get your money back, and it's not taxable because it's a refund. And so this is money you get to build up your capital reserves. You can reinvest in your business, and even double. Let me ask you. So this is so I'm asking questions I think people will ask. So once you find them, are they incorporated going forward? Like now you can show the accountant how, all right, here's how we look for these. And if you're like, are businesses always doing these, or is this a one-shot deal?
Sure. Yeah, it's really one of two ways, as to where obviously when we go back 3 years, we'll find a bigger number than if we were to just obviously find 1 year. So normally how we work is, like I said, we want CPAs to refer us this business because it is a completely different business model, and they would have to totally reinvent their business to do this. And so if we, if we find them money over the last 3 years, we definitely want repeat business to where they can say, hey, here's my federal and state tax returns. Let's do this again. Number one. Or number two, we can say, we can set this up with your payroll provider or your CPA or what have you to make sure that you're taking advantage of this on your payroll, to where we can set certain elections on their payroll to make sure they're doing this, and we monitor it every quarter for them or communicate with their payroll.
Wow, provider. That's awesome. Yeah. Okay.
So normally that is how things are set up, or if they don't want to go that route, we could start a consulting relationship with them.
Okay, that's good stuff. How did you find out about this? Didn't you do this on yourself too?
Yeah, so right. So, man, there's dozens of companies that are doing this. And, I actually worked with a company out in California that was doing this. And, the biggest thing that we're obviously trying to do is to be compliant in the space. We don't want to poke the bear that is the IRS, but we're also just following the tax code language and doing it appropriately. So I found it worked for a company for 4 years out in California. Then we connected with a CPA here locally down in Baton Rouge, Louisiana, and we started the company just because we wanted to have a better mousetrap and we wanted to do some things more compliantly. So really uncovered it through another company. And then as we got into it, this is not rocket science. This is not brain surgery. Really, anybody can uncover this. You just got to take the time to go to irs.gov, read the tax code, and search for certain tax credits, and which is obviously not the desire of most Americans out there.
Right.
So I would say it really came from a passion to, our hatred is, tax is a form of legal theft or robbery. And so, the more that we can uncover for ourselves, and yes, I did it for my business as well too, which made me more of a believer in this, really has fueled this business and passion. So learn it from another company, really perfected it in our own craft, have a little bit better mousetrap, and making sure that we're very compliant on the back end as well with the IRS.
Yeah, compliance meaning doing it so you're not out there as a gunslinger, doing it within the rules. So that's the thing. So when you're working with somebody, you want to, because the tax, I was with Tom Wheelwright one time. He said, look, the tax code is a stimulus program. So it's designed to help you get rich. See, and so yes, it is legalized theft, but what happens is they also are, if you do what they want done, which is what? Provide jobs, provide housing, provide food, and provide energy, you will seriously minimize your taxation. But there's a lot of moving parts there, because what they understand, the smart ones understand, they can't tax all your money. Okay, I don't know about the AOCs of the world, but you can't take all of people's money. But if you put carrots in place, so if you want, we already found, for example, what government housing does, and that plan don't work. So if I can put money behind incenting private people to invest in real estate to provide safe, clean, affordable housing, that is where people will start to spend their money. If I want to incent people to do solar, or, green energy, I need to put some money there to incent them to research and develop a way to do that.
Yes.
Which is what the credit is all about.
Yes.
It's coming to me now as I'm talking to you.
Yeah, I mean,
he's been trying to get me to understand this. I was like, oh, okay, now I get it. So,
yeah, it's 100%. It's encouraging innovation in the economy. It's encouraging you to hire certain sectors that have trouble in the workforce and in U.S. labor, and it's encouraging just really domestic production in the United States of America. So, and it's also encouraging to have lower incentives in healthcare. So you're 100% right. The government is just saying like, hey, here, if you do this in the tax code, it's going to stimulate the economy the way we want it to go. And I think in a very productive way. And it's very good. And I would say what business owners really need to be mindful of, at least the obstacles or hurdles that we have, is like, number one, hey, if I do this, am I going to get audited? And number two, well, what if you say you're going to find money and you actually don't? Now, I know you didn't ask me that, but it just kind of reached into that.
No, good, because yeah, that's a good question.
I would say the government or the IRS can audit you for anything, but I would say we are just following the prescription that the IRS is setting forth for us. So the chances of audit are extremely low because we're not saying in a business that wouldn't qualify for these credits, and we're just following truly the IRS language and documents. And we become like an investigator in their business. And then we kind of turn around and become like an attorney to present a case for the IRS, because we're sending someone in a cubicle that's like a technical representative for the IRS or a field agent. And we're educating them like, hey, here's how ABC Construction or whatever it is qualifies for this credit. And we're just following the formula. And so chances of audit, I haven't experienced it out of 50 businesses, but are very low. And secondly, if we say we can find, $50,000 and we actually only find 10 or 20 or what have you, then our money is built on contingency fees. So our just, fees would be prorated on that. Or if we didn't find any money at all, which has never happened. But if something like that did happen within legislation or what have you, and they gave us like a retainer down payment, well, we would refund that 100%. So those are usually the obstacles that we face.
Okay. So, and let's go talk on the audit thing, because one of the things is like, I've been teaching people on the consumer side to have a home-based business, but to keep good records. So like we have a service where we teach people to use TaxBot. I'm a big fan of Sandy Bakken, for example, of how to see the key is documentation, right? And so if it doesn't matter if they come calling, is if you've documented everything properly, you don't have to worry about anything because your accountant has all your documentation, because you shouldn't be going anyway. First of all, that's a whole other thing. And boom, here. And if they see that, it's all right, 45 minutes later, it's over because you've shown all your stuff. They're not making stuff up. This is stuff you've done. And if you get organized, if you're in business and the type of businesses. So, and let's talk about that. You're keeping good records. If you're a S or C Corp, you have to keep good records. You have to do double entry accounting. You have to, so you're doing that. So you're just getting better at that. So talk about who, let's say the ideal candidates, the sweet spot for this, who should be perking up. And then I know you have somebody you're working with that's a little bit out of that sweet spot. Because I want you to know that, you should still investigate it.
Sure. Yeah, I would say like our sweet spot, and now these are credits these are wage-based credits. And so like, obviously there is value for a business to have employees, but even if they don't, if they use contractors or what have you, we can still work with that. Or if they purchase supplies where they have a single member LLC or sole proprietor business, we can work with them. But I would say our sweet spot for, revenue is, say, for have anywhere from 1 to 10 million in gross revenue and to have 2 employees or more. That's really our sweet spot. Now we're working with companies that will have higher revenues than that and have lower revenues than that. Literally, we're working with a cabinet manufacturer shop to where, their revenues were, $300,000, and we were able to find them $28,000 in tax credit. So it's not so much built on your revenue, but it's mainly the industry that you're focusing on, the industry that you're in. So if the industry does some type of engineering, now that's a broad topic. I'm not just talking about civil, mechanical, structural engineering. Literally, you can engineer things in the healthcare space, or engineer things for software development, or engineer things in other industries.
What about, for example, as I'm thinking about clients I have, they're like in the kitchen and bath business, and it's a lot of measuring, a lot of, I've seen people come in with laser pointers to make sure the granite, the granite tile was installed, measured right so they would cut it right, so they didn't mess up this expensive granite. I mean, is I'm just picking one. Is that if you had that type of business, would that be considered?
Yeah. So just make sure I'm understanding. You're saying that they're like installing granite and bathtubs and things of that nature.
Right. They did like they're demolitioning is the word. And then let's say they install high-end, like $50,000, $60,000 kitchens.
Yep. Yeah, no. So definitely, like, if you think about it, when they install something, they had to measure, the space, the dimensions, the diagrams. I mean, so that's principles of geometry.
Yes.
And there is some scientific principles built into that. So yes, that would qualify. Now, what the IRS is figuring out is okay, are they brokering that out and someone else is doing that? Or are they doing it themselves? Because the IRS wants to know who is taking the risk, because they're rewarding businesses if you're taking more risk, and that will hopefully, risk equals, some good reward.
Right.
So that they just want to know who's taking the risk. So if they're doing that on themselves and their employees, then yes, they would qualify for it. If they sub it out to contractors, then we'd have to look at, who's taking the risk on that, and we can't take 100% of what they do, but for contractors, we could take up to 65% of what they do.
Wow. So yeah, that's, so it's worth an analysis. If it don't cost anything to analyze it, it's worth it. Keep going. So that hit me, because I'm thinking about I'm actually thinking about somebody specific that we're going to talk about when we stop recording, but keep going.
And just compounding on the incentive analysis. So it's totally free. Obviously, the only cost is your time. And, after that 45 minutes to an hour roughly of our time, within 3 to 5 business days, we will say, hey, based on your answers and your industry and what you provided to us, within 3 to 5 business days, we think we can find a range of credits. And so we say, hey, do you want to move forward? Now and then we would need documentation, as you pointed out. So we have to look at tax returns and any profit and loss or W-2 or payroll information. And we have to know, hey, do you have employees and what are their job titles? And we help you with all that. And we upload that to our team of CPAs and tax professionals. And then in a period of 1 to 2 weeks after that, we come back to the penny of, hey, here's exactly what you will get back from the IRS. And then there's a Q&A, because our biggest really job is just educating and empowering business owners, because they weren't aware that they're doing activities that are relative to these type of credits.
Right.
So it's just mainly we're exposing them to things to get them some cash back.
Okay. So we're talking about 1 to 10 million, and that's small business. I mean, the government, they count. I was talking to one of my insurance companies, and they were like, small businesses like 1 million to like something crazy, like $75 million. They can, it was, what are those ranges of what they consider small business? I'm like, I'm from Philly. The Poppy store is on the corner. That's a small business. That's a little corner food mart. We call in Philly, we call them Poppy store. So I see but I've got, contractors that have like $1.2 million, kitchen contractors that, $1 million, $1.5 million, and that's a good business, but that's a tough road. So, and you have the nerve to shut them down. Don't get me started with that one, but but talk about that. So this company had about what, 250 in revenue?
Yes, it had a little bit over 250,000 in revenue. Right. They only had over the last 3 years, they had anywhere from 2 to 5 employees. Mm-hmm. So it obviously it's not a medium-sized business or a large-sized business. Definitely a small business. Mm-hmm. And so we were able to look at. Now this was a cabinet manufacturing company. And so they were purchasing things related to supplies to help them build and construct the cabinets. And we're also able to look at their wages and take a percentage of that in relation to this research and development tax credit. And so, we're able to find them, just south of $30,000 over that time period. And they were by definition of the IRS, a small business. And for these credits, we use certain calculation methods for that. So if the business is 5 years or less, they're considered a small business, and there's a certain calculation that can benefit small businesses for that. So they had started in 2016, and it's really helped that business, especially right now with Corona, get some cash back so they can reinvest back into their business.
That is fantastic. All right, what else am I forgetting to ask you? Like the other questions.
Yeah, no, I mean, I would say, so we've obviously talked about the process. We talked about kind of the hurdles for business owners. We make money on contingency fees. So kind of how that works is if we find, I'm just making up a number, $100,000, our fee, at least standard in the industry, is anywhere from 30 to 35%. So we mainly use a 33% fee. And I would say right now in working with business owners, normally we take a fee up front because we are expensing CPAs and operations and research analysts for this. But now in working with business owners with COVID-19, man, businesses need their cash flow. And so we're trying to be as creative as possible, or just not even taking a payment up front to help it make it be a win-win for businesses. And I would say these credits were made permanent in 2015. Now, jokingly, I don't know what permanent means with the government, but in 2015, they did make these credits permanent. And we don't see them going away for many, many years because, the government is rewarding engineering and science and innovation and creativity. And so we don't see them going anywhere. And so, we think this is a good play to help small businesses recover cash for a very long time. And there's a lot of depth in the process, but at the end of the day, man, it's just a simple way to recover some cash that can help you put more money in your pocket on what you deserve, or help you reinvest in your business.
That's right. Get more money so Curtis can help you put that money to work, So my pastor said, listen, I don't mind you having self-interest. I just want to know what they are. My goal is to help you have more money so you have more money. So Curtis can help you save more money. And so you can make more money so you can have more money for Curtis to help you save more money. So it's like, it's wealth cycle that we're trying to create, velocity of money. But first step is keep more of what you make or get back if you've given away too much, which is really what the show has been all about. This is exciting. I'm glad, he's been telling me about this for about a year and I've never completely understood it. So it took this interview for the light bulb to go on, but this is exciting. So folks, call me. I'm going to put so we can work together on this. So we're going to put a link in the show notes for you all to reach out. But if they want to find out more, Sam, where get more information on it, or find out how to do a consultation, what would you have them do? Where would you have them go?
Yeah, I would say beyond reaching out to you, is our website is reclaimtaxincentives.com. And that's probably the best way. We have explainer videos on there and just kind of basic information on our process and what we do. And if, wanted a direct contact, you could reach out via email at info@reclaimtaxincentives.com as well. We can assist in that way.
Make sure you tell them Curtis sent you.
Yes. And we'll refer you back to Mr. Curtis May.
Yes.
100%.
Yeah. So listen, this is exciting. Man, there's so much. My head is spinning right now. We should end, and I think we're going to end on that note, because I think that, if you're hearing this and you're in that market, so we showed you 1 to 10 million, but if you've got a business, a construction firm, and, you're making, like 250 is a little over $20,000 a month. So my family had a tavern business that was doing that. And, so that doesn't mean you're making a lot of money, because, there's a lot of overhead, there's a lot of cost of goods sold. So you literally have to be more efficient, right?
Yes.
And so I take people through a process to get an idea, because the purpose of the business is there to serve you, to help you become financially independent. It's not to create jobs, okay? Mm-hmm. If you're in business, you're in business to be able to live life on your terms and be able to create the life you want, and to create economic independence, meaning that you have more passive income than you have expenses, even if you shut the business down. That's the goal. All right. And so the first step is to get more efficient, to keep more of your money, because that you got back $100,000 at $50,000. I'm sure y'all could figure out something to do with that money.
Yes.
Right. And so this is not rocket science. It's a phone call to reach out and see if we can help. You have nothing to lose but the money you're already losing. Right. So guys, thank you. Sam, thanks for being on the show.
Yeah. No, thank you so much. And I'll say one more analogy.
Yeah.
If the goal to business owners or to get them to run fast and be productive, essentially their shoelaces have been untied for the last so many years. And our job is to help them tie their shoes, get them some money back, whether it's 10 or 15 or 20 or 50 or 100, obviously connect with you to put that money back in their pocket so that they can reach their own version of financial independence of what you talked about. So true the goal.
Yeah, because it's different for everybody, but that's the goal. Compete, but don't compare. That's what my mentor once told me. But we've got to get this done, and you got to get on the other side of money. So this is one way. And so keep listening. If you like this episode, please leave us some comments. On iTunes or Stitcher or wherever you listen, and share. Listen, like, and share. So we've got some information that needs to get out. Thanks again for listening to the Practical Wealth Show. Sam Denton, thank you again for being our guest and dropping serious knowledge bombs on our listeners. And go out there and be productive and be prosperous, guys. Thanks for listening to the Practical Wealth Show. We're out.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be granted before